This is Retirement Keys with Anthony Kangemi from Crescent City Retirement Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Anthony provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is Retirement Keys with your host, Anthony Kangemi.
All right. Well, hello and welcome back to our show, Retirement Keys. My name's Anthony Kangemi, and we have our fabulous co-host with us today, as we do every Sunday, Tony Shore, and we're just so happy you've joined us. And Tony, we really appreciate you being on the show as well. We really couldn't do the show without you. You've got our show just so, I don't know if people realize how much goes into these shows, in terms of preparation, but I see how much y'all do, you and Mitch, and I just can't thank you enough for helping us get this show on the air every week.
Well, I really appreciate you saying that, Anthony, and it's a lot of fun, actually. We put the work into it, but we also have fun, and I like doing the show with you. And I appreciate you having me on your show because we talk about important things, especially when it comes to preparing for retirement. But today I have to ask you about how your house is holding up. I know a lot of people were without power there because of the hurricane. So how are you all doing there? The office is fine, right?
Well, Tony, 2 out of the 3 are fine. So our Metairie office is back up and running. Our Mandeville office is back up and running. Unfortunately, our Houma office. So the areas, I would say, our Terrebonne Parish, Lafourche Parish, in those areas, Tony, the storm really wreaked havoc. And then, of course, even in St. Charles Parish and out there in Laplace, we had some damage, Tony. I live in the Metairie and Kenner area. Our office is in Metairie, my home's in Kenner. And we had damage and we had power outages, and it really was a tough storm for so many. But I'll tell you, some people, like I say, in that Lafourche and Terrebonne Parish area, especially, and St. Charles, I would say, and other areas, of course, but these areas got hit really hard. Our Houma office, Tony, is in a pretty good size office building, and half the roof got torn off, and there a lot of rain came in, and they say, I haven't been to that office yet because they won't let us in yet, but they say that just about every office suite in that building was just drenched with water. Yeah, it's really a mess. They're talking that, then structural engineers have to go out. They're talking about maybe somewhere in the neighborhood of 4 to 6 months before we'd be able to get back into our Houma office. So that area really took a beating, Tony. They really did.
Wow. Well, I know your main office there in Metairie is good, so that's good. And yes. You got a little damage to your house, didn't you?
Yeah, we did. We lost, shingles, and water came in. I tell you, it's that water damage, and then the wind. This storm, Tony, we had Katrina years ago, and of course it was a big water event. Levees broke, and it was terrible. This one, Ida, was really more about the wind.
Sure.
And from what I understand, 150, 160 mile an hour winds, and then when it hit shore, it just kind of sat for a while.
Yeah.
So it's a sustained wind blowing and knocking down trees and power lines everywhere. It's significant, and we're not out of the woods yet. There's many areas still that don't have power, and but I tell you what, though, these crews, these linemen with all these companies, utility companies that are out here. God bless them. They are working, it looks like round the clock, some of them, and long hours, and they're working hard, and they're getting us back in shape. But this whole area, South Louisiana, really took a beating with this Hurricane Ida.
Yeah, it really did, and it's interesting. I mean, it's too bad. I mean, just hurricane season seems to get worse, and I know that area has had its share. So I'm glad to hear, though, things are getting back to normal for most people. I know you still have a couple employees without power, don't you?
We do. Wow. Melissa's in St. Charles Parish, no power. They say that the power, I think the projection is like September the 28th or 29th. So, it's still, they've still got people that are out of power. And I know down in, like I say, Lower Terrebonne and Lower Lafourche, I mean, there's so many people, I mean, lost roofs and water came in and sheetrock, drywall just piled in. And, I mean, when you lose your roof, I tell you, even the shingles, when they come off and water starts coming in, I mean, it's an issue, because then all of a sudden you've got mold issues and and all of this. So, it really is, it's something. I don't think we'd ever stay again. I mean, we stayed for this one. If it's a 4, a high 3 or a 4, I think I'm of the mindset now that you really need to leave town, on those storms, high 3, 4s. And then, my goodness, I don't know, this one might have been even approaching high 4 or even a 5.
Right. With the winds, you don't want to risk it staying in your house. If the wind could pull the roof off or something, you don't want to get hurt or risk the family. So, yeah, I can see your thinking there. That's for sure. Well, you know what? We're going to talk about a little better topic, something that our listeners can look forward to, and that is ways to get money once they're in retirement. I mean, we talk a lot about planning for money, how to save that money up and have a plan and have money for retirement before you get there, and that's important, obviously. You want to do that, but what if you need money in retirement? So I'm going to jump right to my first question here for you. I think you've hit on a topic that's interesting. I'm glad we're talking about this one. I mean, how many people, while considering their retirement, think they're going to need a loan, a few years into retirement? But it can happen.
Tony, I think that's a fair point. There's a Investopedia article, 10 Ways to Borrow When Retired. Has several options that may work for retirees who need a loan. The first is a mortgage loan, which uses the home you're looking to buy as collateral. For many retirees, this one may be tricky because of the income requirements. However, depending on your asset allocation, this type of loan may not be out of reach. Home equity loan is another potential option. With this one, you're borrowing against the equity you've built up in your current home. And generally, borrowing needs to have between 15 and 20% equity in their home, a loan-to-value ratio of, let's say, 80 to 85%, and a credit score of north of 620. So a home equity line of credit, or you might have heard the term HELOC, is another option that's similar to a home equity loan.
Yeah,
both
I've heard that.
Both of these loans are secured by the home. A home equity loan gives you an upfront lump sum that you pay back over time with fixed rates and payments. A line of credit is used only when you need it and generally has a variable interest rate and payments that are fixed. And so, especially in this time, Tony, when people are even repairing their homes and pulling, needing funds to do repairs, let's say in our area, this is happening now, and waiting on insurance and deductibles and all these types of things. You can always pull money out of your retirement accounts, of course, but that's a taxable event. And so looking at the best strategy to, let's say, pull money out for whatever it might be, and then and looking at those types of loans, and then maybe building out a structure, a payback over some different accounts, let's say retirement accounts, so we don't overpay in taxes. So a lot of times these loans, Tony, could be used as tools, if you will, to minimize taxes and just do things a little bit more efficiently, if you will.
Sure. Well, and you hit on a couple of things there. You know, my wife and I have used, we have a HELOC, a home equity line of credit. And you talked about that. That's a good one. I mean, we're not in retirement, but we have that. And if you're in retirement and own your own home, that's a good option because it worked well for us. We just used that money for remodeling and to put in to fence in our backyard. So that worked out quite well. But where does potentially just refinancing your home fit into all of this?
Well, a cash out refinance loan allows you to refinance for more than you owe, but for less than the home's value. That extra amount becomes a secured cash loan. Now, be aware, however, that unless you're refinancing for a shorter term, you'll end up increasing the amount of time it will take you to pay off your mortgage. Another option is the reverse mortgage loan. Supplies a regular income stream or a lump sum that's determined by the value of your home, and the loan is paid back when the homeowner dies or leaves the home. We're going to address reverse mortgages in far more detail later on in the show, but this is a way, Tony, in these reverse mortgages where people that are over a certain age, 62, they're over a certain age, they can access some of the equity in their home. So
Sure.
It's another just form, just a product, if you will, of the different types of loans that can be made.
Sure. How about auto loans? I mean, I would imagine that most folks are going to purchase at least one new car during their retirement, right?
That's right, Tony. And thankfully, auto loans aren't typically much of a hurdle for most retirees because the loan itself is secured by the vehicle you're purchasing, while buying new wheels with cash means you won't have to mess with paying interest. You should also do so if you're sure it won't drain your savings. So,
Right.
absolutely.
Yeah, you don't want to pull money out of your savings or your retirement accounts to buy a car, that's for sure. And that makes sense to me. It's good to know that you can get an auto loan even if you're retired. That's good. And if that, a monthly auto payment is manageable, you could go that route rather than taking a big chunk of cash out of the bank. I like that idea.
Absolutely, Tony. And debt consolidation loans is also something some retirees may benefit from. This is an unsecured loan that may help you refinance your current debt load with a lower interest rate. You should note that going this route may mean it will take you longer to pay off your debt, especially if it lowers your payments.
Yeah, well, that's true. That's a good point. And if you're a retiree who might be in the market for a loan, working with somebody like yourself first, an experienced financial services professional, is probably the smart move, isn't it?
I think so, Tony. I agree with that. And another thing older folks should be aware of is that if they still have student loans, failure to pay on them could mean part of their Social Security is being withheld. If you have concerns about heading into retirement with student loans, you may want to discuss deferments or forbearance with financial service professionals. I should also mention that both unsecured loans and lines of credit may be other options for retirees. Though they're more difficult to get, they don't expose assets to risk. You can utilize banks and credit unions and peer-to-peer loans that are funded by investors and credit cards with 0% introductory annual rates. You want to be particularly careful with the last one. You should only take a credit card option if you know you can pay the entire thing off within a year or so, let's say. And one other plug for why you want to look at, work with a financial professional here, Tony. Any one of these options could be problematic for your retirement strategy. Being cognizant of that can help you make decisions that won't jeopardize the retirement you've dreamed of. So, even though there are tools out here, Tony, there's different types of loans and different strategies. And of course, we're wanting to, utilize debt reduction strategies and keep in mind of tax strategies along the way as we take distributions from our retirement accounts. It really just piecing it all together and really, formulating a really good plan is obviously very important. And yes, utilizing a financial professional that's familiar with these strategies is obviously a good idea.
Sure. Yeah, and that's smart. Now, we should probably take a quick break here. Is there anything else you have for our listeners or want to add?
Well, I just want to, thank you all for joining our show as you do every Sunday. We really appreciate coming to you. We hope the content is helpful. For those of you that are, they're still, struggling with the aftermath of this recent storm, I just, our heart goes out to all of y'all, all of our, clients and listeners and your friends and family. We realize that this has really been a hard time. This storm has really, knocked us back a peg or two in our communities. And so I just want to let you know that we're here for you. Our hearts go out to everyone that's been affected by this storm. And we do thank you for tuning in and listening to our show.
All right. And listeners, stay tuned. We're going to be right back with more of Retirement Keys with our host, Anthony Congemi, right after this.
You've been listening to our shows and advice on getting your finances in order and creating a retirement income plan that will last. Now is the time to take advantage of our special offer. This is Anthony Congemi of Crescent City Retirement Group, and we're now offering a complimentary gourmet dinner and retirement planning workshop, The 5 Keys to a Stress-Free Retirement. This is one workshop you won't want to miss. Call in the next 20 minutes for this no-cost offer. Seating is limited. Call Crescent City Retirement Group within the next 20 minutes at 504-828-2171. That number again is 504-828-2171.
And welcome back to Retirement Keys. I'm your co-host, Tony Shore, and I'm here with our host, Anthony Congemi, the man with the plan. Anthony, great show so far today. You've been talking about some of the ways that we may be able to secure loans or get money should we need it after we've retired. And you've given us some great information so far. What do you have for us next?
Tony, during our first segment, we spoke briefly about reverse mortgages, and I mentioned that we'd be discussing it in more detail later on in the show. So let's do that right now. It can sometimes seem like you get through a single night of channel surfing without seeing the actor with a mustache who played a private investigator on a hit in the 1980s TV show.
Oh, yeah.
You've seen them trying to talk you into a reverse mortgage.
Yep.
But are they really all what it's cracked up to be?
Sure.
So Investopedia article, The 5 Signs a Reverse Mortgage is a Bad Idea, explains a reverse mortgage allows homeowners who are at least 62 to convert their home equity into an income. Now, you may have guessed the article doesn't look fondly at them, but let's take a deeper dive. Like any other financial product, reverse mortgages may be a good solution for some people, but they aren't something you should just jump right into. They require a lot of research and a lot of thought, and most importantly, a lot of conversations with your financial services professional.
Well, yeah, for sure. And, we've all seen Tom Selleck with the mustache promoting, I like how you mentioned that, Magnum PI, promoting the reverse mortgages. But I think they're a fascinating part of the financial landscape. And I can recall a time, I think thanks in large part to aggressive marketing, it seemed like the perfect financial solution had fallen from the heavens right into our laps for retirees. But eventually there was some pushback. So as you implied a moment ago, like a lot of financial tools, they work really well for some people, but for people in other situations, they might not work so well.
Well, that's right, Tony. And while we're going to spend this segment examining some of the potential negatives with reverse mortgages, the truth is that you've done your homework and that you think it might fit your specific situation, but by all means, make your case to your financial services professional. Now, Investopedia first warning bell is that a reverse mortgage might negatively affect the inheritance you intend to leave to your loved ones. Many homeowners with reverse mortgages pass away. Their spouse or family member would typically pay off the loan, which often means selling the house to generate the needed funds. If the house sells for more than the remaining balance, then the excess goes to the estate. But if the house sells for less, then your heirs don't see a dime, and FHA insurance makes up the gap. And that's why you must pay mortgage insurance premiums if you take out a reverse mortgage. So, if there's still equity, Tony, and the heirs sell the house, then of course they pay off the loan and then they can keep the equity. If there's no equity, then there's nothing there to keep.
So if I have this right, Anthony, if you want to leave your house to somebody and you want a reverse mortgage, you really need to be certain that the people you want to leave the home to can pay off that loan.
That's exactly right. Along those same lines, if you have people living with you, whether family or friends, and they aren't on the loan paperwork, they could be put in a tough spot after your death. Additionally, people who live with you may be forced out of the home if you move out and are gone for more than a year, because a reverse mortgage requires the borrower to live in the home as their primary residence. Long story short, Tony, if the borrower passes away, sells the home, or moves out, the loan is due immediately. Our potential solution to get around this is to list the people who live with you on the paperwork. But bear in mind that anyone under the age of 62 who lives with you is ineligible to be listed as a borrower.
Yeah. Okay, so that makes sense. And earlier in the segment, Anthony, you were talking about the importance of working with someone like yourself, a financial services professional, if you're considering a reverse mortgage. But I think you really drive that point home by talking about what can happen if you have people living with you or if you want to leave the home to somebody.
Well, that's right, Tony. And, medical bills are a common reason that many people seek a reverse mortgage. But again, there's a lot to consider with this move. While a reverse mortgage may provide the cash you need to cover those bills, you have to stay healthy enough to continue making the home your primary residence. If your health situation worsens and you eventually end up in some type of, let's say, long-term care facility for more than 12 consecutive months, you're on the hook to repay the loan in full because your home is no longer your primary residence. On a yearly basis, you'll have to certify in writing that the home you have the reverse mortgage on is still your primary residence.
Okay. So that's interesting. It seems to me that if you're considering a reverse mortgage, you better plan to stay there a while, right?
Well, that's exactly right. If you think you might move relatively soon, whether for health reasons or by choice, a reverse mortgage may not be the smart play because of significant upfront expenses like lender fees, initial mortgage insurance costs, and then the ongoing mortgage insurance premiums. And don't forget closing costs like property title insurance, home appraisal bills, and inspection fees. If you have suddenly leave your home or sell it, you have a mere 6 months to repay the loan. And while it's true that you're entitled to any profits beyond what you owe on the loan, you already have shelled out potentially thousands of dollars in costs. So it just has to be considered, Tony, what the overall situation is. And again, I'm not going to say that any loan or strategy is a bad one. It's just really going to depend on the situation and what we're trying to accomplish to make sure that we utilize the right product for the job we're trying to accomplish.
Sure. And, we've talked on past shows, Anthony, there are so many different financial tools available to people. And I know that that's what you and your staff work hard to do for your clients is come up with a plan before you get to retirement to deal with these things. But sometimes in retirement, things happen, and people need to seek out a financial services professional like yourself to really tackle these items. Now, we're almost out of time for today's show. So I want to wrap it up. But before we go, let our listeners know about that special offer you have for them. I know that you're offering a complimentary, no cost, no obligation consultation. And I don't know, are you going to get some dinner seminars going again too?
Absolutely, Tony. So we have several workshops scheduled for Keith Young's on the North Shore in Madisonville coming up the last week of September and the first week of October. So by all means, for all of our North Shore listeners, please give our office a call to schedule some time to come to one of our retirement workshops. As you know, we really, the fundamentals to any retirement plan are going to be the 5 keys that we talk about, the estate and legacy planning, healthcare strategies, investment planning, income planning, and of course, tax strategies. And so that's really the whole enchilada, if you will, Tony, those 5 key areas. And so I would just encourage our listeners, if you don't have a formal retirement plan, a written plan that you can really lay out and see line by line and see how the plan looks over the next 10, 15, 20 years, even all the way. We run our plans all the way to age 100. But if you don't have that formal plan, or if you'd like to make some comparisons or just get that second opinion, by all means, take advantage of this special offer.
Thank you for listening to Retirement Keys. Don't pay too much for taxes or retire without a sound income plan. For more information, please contact Anthony Congemi at Crescent City Retirement Group. Call 504-828-2171 or visit the website at crescentcityretirement.com. All matters discussed during this show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation. Anthony Congemi and Crescent City Retirement Group are not affiliated with or endorsed by the Social Security Administration or any other government agency.